Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the expanding evidence of a bottom in the US dollar, the US non-farm payrolls report on Friday, oil prices hitting a 2-year high, the controversial Catalonia referendum this Sunday, and the start of the US third quarter earnings season. But first, let's have a rundown on the most important corporate and economic releases this week. So starting with corporate results, there's not much on Monday, but Monsanto and PepsiCo are reporting on Tuesday, BlackRock on Wednesday, a plethora of results on Thursday with Game Digital, WH Smith, Citigroup, Delta Airlines and Domino's Pizza, and then finishing the week with Bank of America and Wells Fargo on Friday. Now moving on to the economic calendar, we've picked out what we think could be the most market-moving releases. On Monday, we'll have manufacturing PMI in the Eurozone, the UK and the US. On Tuesday, it's the RBA cash rate. On Wednesday, services PMI in the Eurozone and the UK, as well as ISM non-manufacturing PMI. On Thursday, it's US factory orders, and on Friday, it's US non-farm payrolls, the unemployment rate and average earnings. So Jasper, NFP on Friday, what do you think?
Well, Kelly, so the expectations are for 130,000. That's what the consensus is at the moment. That can change closer to the event when all the forecasts come in. But that compares to 156,000 last time. So obviously quite downbeat expectations, really. I mean, if you talk about the benchmark maybe being 200,000, then last week's 156,000, and now we're looking at 130,000. So the reaction on the day will still be, I think, just relative to expectations. So, maybe 20,000 either side, 20,000 above, we can say some dollar strength, below, dollar weakness probably. So normally the way it plays out. But the general context of things is 4.4% unemployment. So we're pretty much near full employment. So, naturally these job gains are going to go down over time. Maybe the one to watch out for will be earnings growth. Last month that was 0.1%, which was a bit meager. So if that can impress on the top side, then that'd be another reason for some dollar strength.
Right, yeah. And do you think NFP has more significance given the gains in the dollar over the past week or so?
Yes and no. I mean, no from the prospect that I think probably the most likely is that we're in for a period of dollar strength anyway. Mm-hmm. So from that perspective, you can think that maybe the result, if it's a disappointing one, maybe it provides a dip to buy into for the dollar. If it's a good one, then maybe this is the real catalyst for this what looks like a little base in the dollar at the moment to really extend into maybe a new uptrend. The backdrop of that, to my mind, is that the Fed have given some pretty heavy hints that they're going to hike rates in December. And so I don't think they can really backtrack on that. It would have to be a really devastating one-off report. And even then, I think they can call it a one-off. The overall trend is that the labour market's quite strong. So, it's definitely going to be a good one to watch. And there's lots of US data out next week. And that's all in the context of a strong dollar move at the moment. So I think it'll be a good one. And obviously, we have our webinar where we'll be covering it live as well.
Yeah, great. Now, last week you said that oil would have significant rises in price, and then we hit 2-year highs. What do you think on that?
Yeah, well, we just came short on $60 per barrel in Brent, and so that is the resistance for the time being. So I wouldn't be surprised to see a little bit more of a pullback from there, but I would be surprised if we got back to 55. Mm-hmm. The short-term catalyst was that the referendum in Kurdistan. Obviously, that's threatening the oil supplies out of Iraq. Bit of an issue with Turkey threatening to invade. We're not quite sure how that's going to play out, but I would imagine it maybe just continues as a reason, a positive influence on the market. Overall, though, I just think the supply picture is looking better. And we mentioned last week the kind of technical breakout. I think both those put together still means that we're in for a period of strength here.
Yeah. So we don't know the election results for Catalonia just yet, but is it much of a big deal?
Well, so the thing is, it's not a legally binding referendum. So the result theoretically shouldn't matter because it can't be enforced by law. It's not like Catalonia is suddenly going to secede from Spain because of this result. But it obviously sets a bit of a precedent. It's obviously pretty politically disruptive, and especially when you talk about it in the context of Brexit and a general mood towards populism in Europe. I think it's disruptive towards European politics. So I think it would be a bit of a shock, and I think there is potential for downside in the euro, which again, in the context of this dollar strength, the euro's been falling back from that 120 level. This is another reason to be a little bit cautious about the euro. And again, I should mention that we've got a special report on this in the market reports section on the LCG research and analysis page, so have a look on that.
Okay, great. And as I was talking about earlier, the US earnings season, how do you see that going?
So throw a few stats at you for what we're expecting here. Generally look at the S&P 500. So we're expecting 4.2% earnings growth across the whole S&P 500 for the third quarter. That's down from expectations just as early as June. We're expecting 7.5%. It's pretty normal. It's just analysts revising down their expectations as we get closer to earnings season. But still, it's quarterly growth. It's being driven by the energy sector, even though a lot of those downgrades that we've seen over the last 3 months or so have also been in the energy sector. I think the fact that oil prices have bounced back, we're going to see the energy sector keep outperforming. And most sectors are looking at growth. I think 8 of the S&P 500 sectors are looking at earnings growth. How is this important? How does this stand when we look at the dollar market for equities? Well, the forward PE for the S&P 500 is 17.7 right now. That's above the 5-year average of 15.5 and the 10-year average of 14.1. So what does that mean? We're basically a bit overvalued right now. So we need the S&P to keep producing this earnings growth to justify the levels we're at the moment. And even evidence that it's tailing off, this is slower growth than we saw in Q2, even that can be a little bit of a signal of a potential top of the market. We're not there yet, but it's obviously important.
Okay. Thank you so much, Jasper, and thank you all for watching. If you'd like to see these videos and more and see them as they're released, please click on the links below to follow us on social media.